There's one trading strategy I use every single day. It's super simple and extremely reliable. And it's the reason that I'm able to pull consistent profits from the market like this, and this. The strategy that I'm about to share with you is so simple that even a complete beginner can't mess this up. I'm going to show you the entire strategy from A to Z, along with the exact steps that you need to take so you can start executing this yourself starting today. I'm also going to show you live trading examples so you can see how this strategy plays out in real market conditions. I've been using this exact strategy for over a year now, and I'm consistently profitable from the market. These are some of the trades that I've shared in my community. You can see here, this trade made over $1,000 on this specific setup. Here's a couple of other trades that I've taken where I'm actually trading 5 different accounts at the same time. So on each account here, I'm making $500 plus here. And on this particular trade here, I'm making more than $200 per trade on 5 different accounts. And again here, making over $600 per account on this trade and over $1,000 per account on this particular trade. So you can see my results, but the real question is, how do you do the same? This video is going to show you how to get consistent profit using a simple strategy in the first 90 minutes of the trading session. I'm going to talk to you about what you should be trading as well as when you should be trading. And you're also going to go ahead and learn one setup that's repeatable and mechanical. So there's no guesswork about what you need to be doing. I'm also going to show you what to do if the model doesn't work right away. This is really important, and I think it's something that a lot of people on YouTube don't teach enough of. And the most important thing about this is we're going to do this entire thing without using any indicators, no fancy tools or anything like that. This is all based on pure price action on what I call completely bare charts. So the strategy can be broken up into a few separate stages. First and foremost, we're going to be talking about the first candle rule, which is essentially about using the first candle at a specific time. I'm also going to talk to you about trading multiple time frame setups, not just relying on the one setup. I'm going to show you the mechanical entry model in which we need to use to execute the trades. I'm also going to show you a way in which we can increase probability of the trade being successful. This is a very important step and is really what separates this model from most other models. I'm also going to tell you exactly where to enter, where you need to put your stop loss, and what target you should be going for. So again, there's no discretion when it comes to this model. Everything is mechanically set out for you. All you have to do is essentially execute the plan. And then finally, we'll go through all the different examples of how this applies in real time. So the idea of this strategy is to trade a range. And what you can see here is what most traders would call a typical range. I've marked out the high of the range here with a green line, and I've marked out the low of the range with a red line. Trading ranges like this is a great way for us to find levels where we can execute a trade. The only thing, however, is when you're trading ranges like this on higher time frames, it can be quite challenging and also kind of time consuming to be able to find entries. So in order to simplify the idea of trading a range, what we're going to do is work with a single candle range. Now, the single candle that we're going to be working with is the opening range candle in the first 5 and 15 minutes of a session. Looking at that candle, I'm marking out the high and the low of the candle. And the reason that we want to do that is because that opening candle gives us a lot of liquidity and volatility, which means that it gives us a lot of opportunities to execute a trade. Now, when it comes to deciding what session you trade, you have 3 sessions in the trading day. You've got the London session, the New York session, or the Asia session. And these are the 3 major sessions that you're going to be looking for when it comes to trading futures or whatever it is. The main session that we're going to be focusing on is the New York session. The New York session opens at 9:30 a.m. Eastern Standard Time. And the reason that we focus on the New York session is because this session has the most volatility and liquidity. You can use this on Asia session and London session, but in my experience, the New York session is what gets you the best results. Another question that I get asked is, what can you use this strategy with? I personally use this to trade NASDAQ futures or ES futures, but you can also use this for crypto, Forex, gold, or whatever else it is that you want to trade. Now, the next question we have is, which time frame should we choose? We're going to be utilizing both the 15-minute time frame and the 5-minute time frame for our strategy. We don't always need to use both of these, but in certain situations, I'm suggesting that we use both to give you a lot more flexibility when a certain trade doesn't work out specifically in the way that you want. We're also going to be using the 1-minute time frame, but the 1-minute time frame is only going to be used for execution and not to determine our range. The range is determined by the 5-minute and the 15-minute. So step number 1 is we are just going to mark out the high and the low of the first 5-minute candle that forms at 9:30 a.m. Eastern time. Then the next thing we're going to do is we're going to switch over to the 1-minute time frame, as you can see here, and we're going to look for a 1-minute candle to close outside of the 5-minute range. So if you look at this yellow box that I've got right here, this is essentially the high and the low of the 5-minute range that you just saw. What you're actually looking at is the 1-minute candle formation inside that range. So obviously on the 1 minute, you're seeing individual 1-minute candles that are forming within that 5-minute range. So all we want to do is as soon as one of the sides of the range is broken by the 1-minute candle, that's when we know we can look for an execution. And again, either you're looking for the range to be broken on the high like it has in this example, or it could also break to the low over here and do something like this. But in this specific example, we're seeing that price has broken to the high of the 5-minute range. Now, before we execute on the 1-minute chart, we're looking for a very specific pattern to form before we execute the trade. And what we're specifically looking for is a fair value gap as marked out here. So a fair value gap can be identified when you have a 3-candle pattern where the second candle has a large displacive gap between candle 1 and candle 3. So if I mark them out, candle 1 here, candle 2 here, and candle 3 here, you can see that this yellow box shows us that we have a gap formed in between the candles. That's a fair value gap. What I'm looking for in order to execute on this strategy is I need that fair value gap to be forming and printing outside of the range. So you can see here that we have the 5-minute high. This candle is printing outside of the range because it's pushing above this green line. And because it has pushed above this green line, it now means that all I have to do is wait for this third candle to close, and then I can enter the trade on the next candle. So then the final step is once that candle pattern is formed, we would simply enter the trade and execute right here. I'll just show you another example of this. Right here, you can see a 5-minute high line right there. You can see a 5-minute low of the range here. So there's our range. And you can see the candles printing outside of the range. And once again, here is the fair value gap just right there. And it prints right outside of the range. Therefore, this third candle rate, as soon as that's printed, I can go ahead and enter the trade as I have right here. But what about if the 5-minute range doesn't work? Well, if we look at this example here, you can see I've marked out the 5-minute high right there and the 5-minute low right here. Now, the entry model is correct here because we have candle 1, candle 2, and candle 3 right here. So 1, 2, and 3. And you can see that we also have a fair value gap formed right here. So the entry is right about there on that 4th candle. And you can see that even though we've taken the entry here, the price unfortunately comes up and it wicks us out up here. So how do we correct that? Instead of relying upon the 5-minute range, we can switch over to the 15-minute range as a backup. So let's say you take that first trade and you lose. You can always take a second trade and base it on the 15-minute range as your backup solution. So you can see I've marked out the high of the 15-minute range here and the low of the 15-minute range, right? And you can see here, this is where we took that initial 5-minute setup where the candles printed out and price came up and it actually just took us out right about here. But what's interesting is on this same 15-minute chart on the 1-minute time frame, we can see another setup here. We got candle 1, candle 2, and candle 3 here with this dark green box right here just representing the fair value gap. And it prints outside of the 15-minute range this time. And again, we use the exact same rules, right? The 3-candle pattern is printing outside the 15-minute range. We wait for the 3rd candle to close, and on the 4th candle, we can enter the trade. And you can see that this one works perfectly. So I'm right here on TradingView and I'm using the NASDAQ chart right here, which is what I trade every day. And you can see right here, we have our first 5-minute candle. You can see I'm on the 5-minute time frame here. And I can see the candle here printed at 9:30. So you can tell because you can look at the little label here on the bottom. What I'm going to do is I'm just going to mark out the high and the low of this 5-minute candle by using my trend tool. And then I'm going to switch over to the 1-minute time frame. Now, what we're going to do is we're just going to play this out and see how it prints and see if we break the top of this range or the bottom of the range. So we can see that in this particular example, price has actually traded to the downside. And if we take a look at the behavior of the candles, you can see that we had gone ahead and formed a fair value gap right here. So now we know that because we have this 3-candle pattern, we've printed the fair value gap. that means that we can go ahead and execute a short position tool right here because we are going to the downside of the range, which means now we're looking for a short. And when we're going to go ahead and place our stop loss, all we're going to do is take it to the top of the fair value gap candle, which is right there. So a really simple rule. All you're going to do is place a stop at the top of the candle. There's one thing that I will mention here, and I have had this a couple of times, where price can be very wicky on some occasions, right? Everyday price action is going to be a little bit different. So if you find that PA or price action is very, very wicky and choppy, then you can simply just give yourself a tiny bit more room, okay? But in this example, I'm quite comfortable with the gap here. It's quite displacive. We have broken the range quite strong here, and this candle has printed quite low. So I'm happy for us to place the stop at the top of that fair value gap right there. Now, when we're setting our targets, what we're going to be doing is looking at the middle of the risk to reward ratio, and we're just going to target a simple 2R. We're going to be very mechanical about the way in which we take profit. And the reason we do that is because we don't really want to have a discretionary approach to taking profit. When you're brand new to trading, a lot of the time you end up holding onto trades and trying to get these big moves, and that really diminishes your edge over time. So a really great way for you to just get profitable quickly and actually start making progress with your account is set a mechanical rule for yourself where you're going to take a fixed 2R every single time. So let's go ahead and place this order with the potential to make $2,580 on this trade. Let's go ahead and see what happens. Right, there we go. This trade has come in and has hit target. So that's example number one, and we can see how that works pretty well. And also guys, for traders that want to find consistency and profitability faster, go ahead and check out my trading course, The 90-Minute Trader, where you get access to my entire trading strategy, as well as my advanced strategies that I don't teach on YouTube. You get access to my Discord community, as well as my live daily market analysis. I have students in my community that are posting wins and profits every single day. You also get access to a bunch of other resources that gets you profitable faster. I'll go ahead and leave a link in the description below if you want to go ahead and check that out. Let's take a look at another example here. I'm on the 5-minute time frame once again. Here is my 9:30 candle, which you can identify by looking at the 9:30 label. And I have just used this yellow box to mark out our range this time. I'll switch over to the 1-minute candles and we can take a look at what happens and what side of the range we end up breaking. Okay, now we have broken the bottom of this range, but remember, we need to see a fair value gap form in order for us to execute the trade. And at the moment, there is no fair value gap formed here. Okay, so here we now have a fair value gap that has formed. And I'm going to mark out the fair value gap here so you can take a look and see. So there's our fair value gap. We've got candle 1, 2, and 3. There's the gap. So our entry would actually be, once again, we are taking a short, and it would be around about here. Our stop would be at the wick of the fair value gap, as I've explained before. And we are looking for a 2R move. So let's just go ahead and target down to 2R. And let's see how it plays out this time. Okay, now in this example, we can see that the 5-minute model didn't work. Now, what I explained before was if the 5-minute model doesn't work, we can actually switch this over for a second attempt at the trade on the 15-minute time frame. So 15-minute time frame now, and we're looking at this 9:30 range on the 15-minute rather than the 5. So let's go and draw out this 15-minute range instead. Switch over to the 1-minute time frame once again. And now let's do the exact same thing, but we're doing it on a bigger range on the 15-minute time frame. All right, so once again, we now have another formation on the 15-minute. And again, I will just change the color of this. And let's draw out the gap, and we'll take it on the close of the candle. So once again, we're taking a short. I've got candle 1, 2, and 3, which means our entry would be just about here. We will once again use the exact same system for the stop. The stop this time is a little bit bigger. And the reason it's bigger is because if you look at this fair value gap, you can see that the wick is quite high up. You want to include the wick when you are positioning your stop. So once again, let's go ahead and target down to 2R, just there. Once again, we can go ahead and play this out. All right, great. Now, the reason I wanted to show you that was because it just shows that it doesn't mean that the day is over if you just lose a trade. You can always go and execute a second trade by simply just flipping to the 15-minute range and looking for an alternative setup a second time. This is a fantastic way to have a backup option if the 5-minute model doesn't work for you. In this example, we have a doji style candle, 930 candle here on the 5-minute time frame. But once again, we're just going to do the same thing. So there's our 930 doji candle. Let's get our range tool and let's draw out a little box for us to have a look at. Flip to the 1-minute time frame and let's see which side of the range we break. Okay, so this one, let's just pull this back so we don't rush ahead. We can see here that we have our range that is broken out. We have the fair value gap, which has formed right here. So our entry will be on the close of this candle, which is essentially here. And remember, the stop is just going to go to the top, in this case, of this fair value gap candle. And we are just going to target down to a 2R. And let's see how this plays out. Great. So that one hits really clean and quite well. Let's just come back a moment and I want you to have a look again at the 15-minute, right? So we know the 5-minute work there, but let's also check out the 15-minute just to show you how effective this can be, right? So there is our 930 candle range on the 15-minute time frame now. And I'm going to draw out the exact same range again. And let's switch up to the 1-minute time frame. And let's see how it plays out now on the 15-minute time frame. So we had our initial fair value gap, which we have already taken the short there. But let's see if we get another one. So right here, we have a 3-candle pattern that has printed out. Fair value gap on this occasion is printed out slightly outside of the range, but that's still okay. We can still utilize this, right? And our short position then with the candle 1, 2, and 3 would be around about here. Once again, we will use the top of the fair value gap in order for us to determine our stop loss. And let's target down 2R again, which is just here somewhere. And let's go ahead and see how that plays. Okay, there we go. So this one is a little bit more of a wiki trade. I mean, the stop really came in clutch here because you can see that we whipped up really close to our stop. But once again, even on the 15-minute model, this execution, simple 2R trade has worked out really beautifully, even on the 15-minute time frame. So you can see, hopefully, that whether you're using the 5-minute or the 15-minute range, you've got two different methodologies you can apply here to execute on the 1-minute time frame to enter this setup. Look, if you made it this far, you genuinely have everything you need to become a profitable trader. You understand a variety of different models that you can actually use when you are approaching the charts. I've shown you a simple way to find levels, a really clean execution model that you can apply literally right now. But here's the honest truth, right? This probably isn't the first time that you've seen a strategy that should have changed everything for you and should have helped you to become profitable. Most traders pick up great information, yet they struggle to stay consistent. And I know this because I went in the exact same cycle. I was in the exact same place myself. And it took me years to break that cycle. And what's funny is looking back, most of the important lessons that I needed to actually become successful, I learned really early in my journey as a trader. I just didn't realize it at the time because I kept making the same mistakes and dragging out the process to become unprofitable. And even after several years into my trading journey, I was still blowing accounts. And that's exactly what I don't want for anybody that's watching my video right now or anybody in my community. And that's why I built this YouTube channel. And it's also why I created my program, The 90-Minute Trader. I don't want traders going through the same stress that I went through for years, the confusion and the trial and error that I had to go through to become successful with this. Inside our community, every tool, every lesson, every resource that I've created, it's all designed as a shortcut to avoid the pain that I had to go through. Everything that I've created is built for the younger version of me. And honestly, anyone who's in that same spot right now is the person that I made this for. No trader should have to spend years trying to learn the hard way when there's a community, there's a system, and there's a structure that can fast track the entire journey for you. Inside the 90-Minute Trader, you're not just watching lessons, you're getting access to a full ecosystem that I've built for serious traders. You get exclusive access to my tools that I've built myself, trading journals, and access to strategies and models that I don't teach on YouTube. They are completely back-tested, proven, and actually used by traders inside my community who who are posting wins and profits on a daily basis. Plus, we break down the markets daily and walk through the key levels and outline exactly what we're watching. And whenever you need clarity, you can just jump on Discord, jump into the quick question section, and I could personally come back and help you and guide you through whatever it is you're struggling with. Look, whether you ever join the 90-minute trader or not, I want you to win. And I'm going to keep posting videos and breaking things down on YouTube for free. And if you apply the stuff that I'm teaching you on YouTube properly, you can become profitable. But for those of you who want to take this a little bit more seriously, who want to get there a little bit faster, who want the tools, the structure, the data, and the models, as well as a community around you to help you get to your goals faster, that's why I built the 90-minute trader. Look, you can absolutely do this on your own, but it's just going to take longer and a lot more discipline to get there. You're going to have to hold yourself accountable to be able to get the results you want. The 90-minute trader simply gives you the shortcuts that I wish I had when I first started out as a trader. So if you want to go ahead and check that out, you can click the link in the description and I'll see you in the community. For those of you who have been supporting my YouTube channel and watching my content, thank you so much. Make sure you subscribe and like this video, and I will see you in the next video next week.